The news is screaming recession. The financial channels are a sea of red. Your phone buzzes with panicked alerts. Your portfolio looks like it's bleeding out. It feels like the financial world is cracking apart. It feels like the end. Good. This is the moment we've been waiting for. That fear you're feeling is a primal response. It's not a character flaw. It's biology. It's the same alarm that tells you to run from a predator. In finance, however, that instinct is why most people miss a generational opportunity. They will sprint away from wealth. They will hit the sell button, lock in losses, and ensure they remain stuck on the financial treadmill for life. But for the disciplined few, that fear is not a warning. It's a blaring neon signal. It means one of the biggest wealth-building opportunities in a decade is at your front door. So for the next few minutes, unplug from the chaos. Forget the talking heads on television. They are not your friends. They're performers in a theater of anxiety. Forget the scary notifications on your phone. The business model of financial media is not to inform you. It is to startle you. Their job is to hijack your nervous system. Fear generates clicks, eyeballs, and ad revenue. Calm. Long-term thinking is unprofitable. Panic is a product. They sell it with ruthless efficiency. Our job is to let them create the panic. Then, we buy that fear from the masses at a steep discount. In this video, I'll walk you through the playbook the wealthy use to emerge from crashes richer than ever. This isn't about luck. It's a battle-tested system based on discipline, preparation, and market psychology. The headlines are brutal by design. Markets in turmoil. Trillions wiped out. It's an orchestrated storm to trigger your fight-or-flight response. When you see indices like the S&P 500 dropping, it's natural to believe the sky is falling. Here's the secret. You do not lose money because the market goes down. The red number on your screen is temporary data. You only lose money at the exact moment you succumb to fear and hit sell. That emotional click transforms a paper loss into a permanent catastrophe. People go broke because of permanent decisions they make in response to temporary conditions. They sell at the bottom. They sell right when the greatest opportunity arrives. This isn't about predicting the exact bottom. Nobody can do that. It's about having an unemotional system that turns widespread fear into your single greatest advantage. First, you must reframe what is happening. This is the most important psychological shift you will ever make. The average person sees a market crash and thinks crisis, loss, danger, get out now. Their body is flooded with cortisol. Every instinct screams, sell. But smart money sees the same event and thinks discount or sale. Imagine your favorite store announces a 50% off everything sale, a once-in-a-decade event. That item you've always dreamed of is suddenly in reach. You wouldn't stand outside lamenting how its value has fallen? Of course not. You would run inside and buy the high-quality item you've always wanted at a massive discount. You would feel brilliant. A market crash is no different. It is a fire sale on the world's greatest assets. The entire stock market is being marked down. The best companies on the planet are suddenly available for 20%, 30%, even 50% off. Seeing this as anything other than a spectacular buying opportunity is a failure of perspective. History gives us the cheat codes. It shows a clear, repeating pattern. Let's look at the 2008 global financial crisis. The headlines were apocalyptic. The S&P 500 lost over half its value. Fear was absolute. But what did Warren Buffett do? At the peak of the panic, he published an article in the New York Times titled, "Buy American." "I am," he calmly stated. "Bad news is an investor's best friend. It lets you buy a slice of America's future at a marked-down price." He then invested billions. Those who followed his logic multiplied their money in the bull market that followed. Think that was a fluke? Jump to the spring of 2020. A global pandemic brought the world to a halt. The market plunged over 30% in weeks, the fastest drop in history. Yet those who panicked and sold in March locked in devastating losses. Those who saw it as a sale were rewarded almost instantly by one of the fastest recoveries ever. Go back to the dot-com bubble burst of 2000. The Nasdaq fell a staggering 78%. It was a bloodbath. Yet amidst the rubble were diamonds. Amazon's stock fell more than 90%. Apple lost over 80%. Investors who could distinguish quality from garbage had the chance to buy future world-dominating companies for pennies on the dollar. Buying Amazon in that wreckage was the foundation for building huge wealth. The pattern is undeniable. Time and again, the majority sells during a crisis, locking in their losses. They miss the inevitable rebound. The lesson is clear. Life-changing wealth isn't built when the market is at all-time highs. It's forged in the fire of downturns, when high-quality assets are cheap and fear is abundant. This brings us to the cornerstone of this philosophy, again from Buffett. Be fearful when others are greedy, and greedy when others are fearful. Right now, in any downturn, fear is dominant. You can feel it. That means it's time to get greedy. It's not reckless, gambling greedy, but methodical, prepared, and decisively greedy. So, how do you actually do this? You follow a simple 4-step playbook. This is your battle plan. Step 1. Hoard your ammunition. Build a cash position. Rule number 1. You need ammunition to fight. In investing, your ammunition is cash. For decades, analysts criticized Warren Buffett for keeping a huge cash balance. They saw it as dead money. He wasn't missing out. He was patiently stockpiling ammunition. When a crash hits, if all your money is invested, you're a helpless spectator. But if you have cash, what professionals call dry powder, you are in a position of immense power. You are the hunter, not the hunted. Cash is the master key that unlocks opportunities. It is your ticket to the fire sale. Your first step is to build your opportunity fund. This is separate from your emergency fund. The emergency fund is your untouchable defense. The opportunity fund is your sword for buying discounted assets. The best way to build this is to make it automatic. Set up an automated transfer from every paycheck 5%, 10% into a separate high-yield savings account. Now, for a crucial psychological trick, name that account. Call it your market fire sale fund or recession shopping fund. By naming it, you change your relationship with that money. A common objection is, but cash loses money to inflation. In the short term, yes. But that small loss is the insurance premium you pay for the right to buy assets at a 50% discount. The potential reward dwarfs the tiny cost of waiting. Step 2. Create your recession shopping list. This step separates disciplined investors from emotional gamblers. You cannot trust your future self to be rational during a panic. You must make these decisions now, while you are calm. Your mission is to create a written list of the high-quality assets you want to own for the next decade. Do this in the calm of your command tent, not on the chaotic battlefield. When the market crashes, you don't have to think. You simply consult your list and execute. This list is your shield against fear. What goes on this list? Your choices fall into 3 main categories. First, blue-chip stocks. These are titans of industry with fortress-like balance sheets. Think of Apple's ecosystem or Google's dominance in search. A crash just means you get to own these resilient businesses at a discount. Identify 5 to 10 companies you'd be thrilled to own long-term. Second, the simplest method. Broad market index funds. Vanguard founder John Bogle said, "Don't look for the needle in the haystack. Just buy the haystack." An S&P 500 index fund like VU or SPY gives you a slice of 500 of the largest U.S. companies. When you buy an index fund during a crash, you are making one powerful bet. A bet on the long-term resilience of the American economy. Third, specific growth sectors you believe in. Maybe you're convinced of the future of AI, renewable energy, or biotech. A crash drags down the great companies in these sectors with the bad ones. Your list can include ETFs that track these sectors like QQQ for tech, allowing you to buy into massive trends while they are on sale. Write this list down. On paper, this document is your anchor in the storm. Step 3. Follow the fear metric. Know when to buy. You have your cash and your shopping list. When do you pull the trigger? Trying to time the exact bottom is a fool's game. It's impossible. You don't need to be perfect. You just need to be disciplined. You need an objective signal that the sale has started. The best tool for this is the CNN Fear and Greed Index. It's a free tool that measures investor emotion from 0 to 100. A high number is greed, a low number is fear. When this index dips into fear, and especially extreme fear below 25, that is your signal. That is your green light. It's an indicator screaming at you to get interested when everyone else is terrified. Once you get that signal, you do not go Allen. Instead, you deploy your cash systematically using dollar-cost averaging DCA. Your written plan might say, When the S&P 500 is down 20% and the fear and greed index is below 25, I will invest 25% of my opportunity fund. If it falls to 30%, I'll invest another 35%. I will deploy the final 40% at a 40% drawdown. This methodical approach ensures that the cheaper things get, the more you buy. It removes the stress of trying to pinpoint the bottom. Step 4. Practice radical patience. The holding game, buying quality assets at a discount, is half the battle. The other, harder half is holding on to them. Think of it like planting a tree. You don't dig it up every week to check the roots. You plant it, water it, and give it years to grow. Your investments are the same. Once you buy quality assets at bargain prices, your job is to get out of the way. Let the miracle of compounding do its work. Your activity becomes the enemy of your outcome. The recovery from 2008 took years, but the bull market that followed created immense wealth for those who held on. The 2020 recovery was much faster. We never know the timeline, but we know the destination. Over any meaningful period, the market has always recovered and hit new highs. Crucially, the market's best days happen right after the worst days. Research from JP Morgan shows that if you missed just the 10 best days in the market over 20 years, your returns would be cut by more than half. Many of the best days happen within 2 weeks of the worst days. This is why patience is non-negotiable. Selling to avoid the pain guarantees you miss the gain. I have given you the playbook. It is simple and proven. But knowing the playbook and executing it are two different things. The final battle is not in the market. It is between your own ears. It is natural to feel fear when your account plummets. Your brain is hardwired for loss aversion. The pain of losing feels twice as powerful as the pleasure of gaining. A successful investor learns to acknowledge this internal scream and then ignore it. They train themselves to see fear not as a signal to run, but as a compass pointing toward opportunity. You are also fighting against herding. We have a deep instinct to do what the crowd is doing. When everyone is panicking and selling, the pressure to join them is immense. This playbook is about intentionally breaking from that herd. It's about having the conviction to buy when everyone else is selling. To win this mental game, you need practical defenses. First, curate your information diet. Stop looking at your portfolio every day. Constant checking only feeds anxiety. Switch to checking monthly. Second, when you feel panic, read history, not headlines. Read about past crashes. Remind yourself this is not new. History is a long story of panic and recovery. This protects you from the dangerous phrase, "This time it's different." Finally, focus only on what you can control. You cannot control the economy. You can control your savings rate, your shopping list, your buying discipline, and your emotional reactions. Pour your energy there. Your emotions are the greatest enemy to your financial success. This playbook is your weapon. Whenever the next downturn hits, you will stand at a crossroads. There are two paths. The first is the one the crowd takes. It's a road paved with fear, short-term thinking, and panicked selling. It leads directly off a cliff of financial regret. The second path is the one less traveled. It requires a climb against popular opinion and your own panic. This is the path of discipline, preparation, and patience. It is the path of the smart money. It means seeing a downturn not as a crisis, but as the sale of a lifetime. It is the harder path in the moment, but it leads to true financial freedom. 10 years from now, you will look back. You can either tell stories about the money you lost, or you can enjoy the security you built by being brave when others were scared. The choice is yours. It is a choice between short-term comfort and long-term freedom. If you're ready to stop panicking and start preparing, subscribe to this channel for more clear, actionable strategies. Let's start preparing for victory together. Your future self will thank you.